Hello, good morning. It's Wednesday the 31st. I'm FxPlew and this is the market brief. So Goldman Sachs has been on. They gazumped Citibank's inflation forecast of about 18% by predicting that the UK inflation could reach 22% next year. They expect another major hike in the energy price cap in January, and they believe that the energy crisis could push inflation over 20% because the Bank of England is pretty much helpless to bring it back under control. So that's nice. But they might have a point, you know. Take the hospitality sector, for example. They face up to 400% of an increase in utility bills as there's no energy price cap for commercial enterprises, and that hardship is in addition to higher staffing costs, where staff shortages have pushed sector wage demands to new record highs. What a time to become a new Prime Minister, eh? The hope is, of course, that their first order of business, whether it's for Truss or Sunak, will be to announce new support measures for those most in need. Truss seems to favour targeted support, while sounds from Camp Sunak suggest perhaps another blanket payment may be in order. Call me a cynical old goat if you will, but isn't that straight from the Biden playbook? Buy a little bit of voter goodwill with a cash deposit and see how long you can ride that wave for. In the market, a little volatility returned after the bank holiday weekend. Sterling fell to 116.20, but we open a little higher this morning at around 116.80 against the dollar. We're around 116.40 against the euro, and euro dollar is back over parity at around 100.40 on the open this morning. Now over in the US, things are warming up for Non-Farm Friday. Put that one in your diary. Weekly jobless claims have looked to top out at around 250,000, and yesterday's data for job openings showed a rise with 199,000 new vacancies. Last month's data was also revised higher by more than 300,000. Now, given the strength of last month's non-farm payrolls, well, you'll remember 528,000 new jobs smashed the sweepstake bids. The current forecast is for 300,000 new jobs. A strong number on Friday will help boost the dollar ahead of the next Fed meeting on September the 21st, where there will of course be some pretty serious debate between 50 basis points or 75 basis points as the voted rate hike. Ahead of that, the dollar continues to gain a little strength from market risk appetite and the monetary policy outlook. And yesterday, the dollar index rose to a high of 109.10 on the day. Plenty to keep an eye on. I'll be back again tomorrow. Please join me then. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.